good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 630th video, baby. Yeah. 630 technical analysis videos for you to learn from and much more coming your way. Traders, this video is being filmed on Thursday night for Trading Friday. That would be September 10th, 2010. Traders, before I go any further, you must know this. Futures trading is very risky and can cause substantial financial loss. I kid you not, this game is not for widows or orphans. This game is not suitable for every trading account. If you do not have risk capital and you do not have money to actually lose, do not play this game. For you cowboys out there that have money to lose and don't mind riding the old Bronco, you know what I'm talking about. Traders, we have a turnaround Omni for Friday. Turnaround Omni. Not much has changed since my last video a couple of nights ago. What do I mean by that? The head and shoulders head test is still in play. The head and shoulders head test is still in play. That is an Oscarism. That is an Omni Trading Academy technique. But it is one I have used for many, many years, traders, and I know it works well, and I will be able to show that to you in just a moment. Oh, I hear that sound. I'm using that today because you know it's going down tomorrow. Nice sound, Mike. I like it. You know what the sound of that is, right? I'll bet you don't. It's a brand new one for us tonight. That is the sound of the comment question of the day. The comment question of the day. Are we ready? The comment question of the day, traders, is a question that has been put on my YouTube video, the last video I've done. Lots of questions come in, and then my able-bodied assistant over here chooses one of those questions, and then I get to open it and read it and answer your questions. It's like viewer mail. So I guess we can call this Ask Oscar. What do you got to ask me, traders? All right, so for the comment question, I'm already afraid. I don't know what he's got for me to open it with. It's from Mr. Beanbag from Australia. Mr. Beanbag, you have a question, and you must have something for me to open it with.
I do.
What do I have?
A Windows remote.
Oh, a remote. I like it. A remote. That should be a little tricky. I don't know, Mike. A remote. How you think if I just zap it, it'll open?
Push power.
No good, huh? All right. How do I get this open with a remote? All right. You know, I'm a crafty guy. I'm gonna cheat. You ready? You give me a remote, I start using my head. How do I get an envelope open? I'll use the back. I got you on that one, Mike. I'm getting this bad boy open. You hear that? One ringy-dingy-dingy. All right, so traders, let's get this envelope open and find out what Mr. Beanbag from Australia would like from me on this lovely evening. Mr. Beanbag, I can't seem to get this open. All right, you got me stumped even with the piece here, Mike. I can't get in. I can't get in. Here we go. So what do we have in the envelope this evening? This is going to be a two-part catch for you. 1, 2. Oh, very good. Oh, you almost hit the board. I saw that. Almost hit my soundboard. Mr. Beanbag from Australia. He writes on our YouTube video, Oscar, there is a major 50% retracement line in confluence with the downward sloping trend line you showed in your last video. Can the Emini break below the 1037 PPT plunge protection team area? Well, two things, Mr. Beanbag. Thank you so much for writing in right off the bat. Thank you so much for your comment questions. Don't forget, ask Oscar whatever you want. I'll be happy to answer. Mr. Beanbag, first of all, you're wondering if we can get down below the 1037 PPT plunge protection team. Right off the bat, I don't believe in the plunge protection team. I don't think they exist. They are not here. The plunge protection team is merely an excuse for traders who are long that day or that week and got their heads handed to them, or short and got their heads handed to them, and they go, oh, it was the plunge protection team that made me lose money, because traders will blame just about anything but themselves. There is no plunge protection team. However, the 50% retracement line, you know what I'm going to do for you right now? Traders, give me a moment. Let me go pull a chart. I'm going to go create a chart right now. Look at his line so I can explain it to him. I'll be right back. Okay, Mr. Beanbag, an answer for you. This is the S&P daily bar chart. And what you are looking at, these red lines are called Fibonacci retracements. How do you get a Fibonacci retracement? Well, first of all, luckily, with today's modern technology, it's already a tool, a pre-canned tool called the Fibonacci retracement. What you would do is you would start at the highest high right here, you snap a line, you go to the lowest low right here, you snap a line, and automatically the 38%, the 50%, and the 62% retracement lines get snapped on your chart for you. Now, there are many traders out there that use these lines for trading. Sadly to say, Mr. Beanbag, I really don't use them. I did in the beginning, the first 10 years of my career. I don't really rely upon Fibonacci retracements now, but let's go forward with your chart. Here is the S&P bar chart. His Fibonacci retracements, what he is talking about when he says the 50% retracement, which is a very big retracement line, comes in. It comes in right along the major resistance line. Watch this. It comes in right along here. And if you look at this, this is the 200 bar moving average. It comes in right there. And the convergence of all three come together right there. Your 50% retracement, your major resistance, your 200 bar moving average. They're all right here, right above the market right now. So his question is, do I think that this exists, and will it cause failure to go down to 1037? Well, let's look at the next chart, because yes, you have your confluence right here. You have your 200 bar moving average. You have absolutely major resistance, and you have something bigger than that. Let me show you the next chart, the one sitting behind this one. Don't forget now, Mr. Beanbag, what we have going on here is a major head and shoulders that we have. And let me show that to you. There is a major head and shoulders going on right here. 1, 2, 3. Your Fibonacci retracement line comes in right here. It goes all the way across. It comes in right there. Major resistance comes in right here. And shoulder, head, shoulder, major topping looking pattern with smaller head and shoulders sprinkled all throughout the larger one. Then there's an inverted. I can keep going on this one all day long. There's head and shoulders all over this. So the bigger picture is that this Fibonacci retracement that we have coming across here absolutely has something to do with the analysis that's likely helping the markets move lower. And I think what you'll see is failure up here, and yes, probably below your 1037 level. So for you, Mr. Beanbag, there is your explanation. Your Fibonacci retracements are real. You have put them in the proper spot. Kudos to you on using the Fibonacci retracements. You've used them well, and I think they will add to the weight behind this market. So, Mr. Beanbag, I hope that explanation helps you. Again, very nice usage of the Fibonacci retracements. Way to go. All right, traders, what else is lined up for trading on Friday? The U.S. indices are still in a do or die area. We have a head test taking place. We are at a do or die area. What does that mean? That means the likelihood of the S&P finally failing after hanging around up here for a little while and breaking hard is greater and greater. The longer we hang around the do or die area and the more we do this head test, the more likely the stops will build up below this market and the sellers will come in and take those stops out. Traders, with no further ado, I have some charts that will absolutely describe the head and shoulders head test. So let's go take a look at some charts together. Okay, traders, before we look at the graphs themselves, I'd like for you to look at the technical indicators of the Dow Jones Transportation Average, or at least a couple of the indicators, because that is deemed the leader of U.S. indices. And if the transportation average is the leader and we trade a follower, the S&P, well, then we better keep our eye on the leader and its indicators, correct? Well, let's look. You are looking at the CCI Commodity Channel Index on the daily Dow Jones Transportation Average. Clearly, not only has it rolled over, but it rolled over and it put one of those little double-legged tops in right there. Double-legged, what I mean is it went up, came down, went up again, and then started to come down, sort of like an M, but that's not much of an M. That's a double-legged top. And that's what we look for when we expect a market to continue to move in a certain direction. Double-legged top in your commodity channel index, showing that the indicators certainly are beginning to roll over. Let's look at another indicator. Traders, once again, sticking with the Dow Jones Transportation Average, this is your slow stochastic, an oscillator, another one of our indicators that usually will indicate change of trend. This oscillator is telling us that it's probably gotten into the overbought area and will likely find some weight up here and maybe even start to turn down. So technical indicators on the leader, the transportation average, are clearly beginning to roll over and start to point towards the downside. So those are two indicators that belong to the leader. Let's go look at some charts now because I think you're going to find them quite interesting. Okay, traders, I just showed you a couple of indicators on the transportation average, and they were rolling over as if they were starting to point towards the downside. Interesting that they're rolling over. What we have right here, this yellow area, is the head and shoulders head test. That's what we expect now. First you have the shoulder, head, shoulder, and it is there. Now you're getting the head test inside of this yellow area is where we would expect failure. Of course, you have this major resistance line. It hits here, and it hits right where we are right now. Traders, this video is much like the one we did just a couple of days ago. Not much has changed here. So here we are having the head test with indicators beginning to roll over. I think that they are telling us that the head test is going to fail and we will follow the indicators back down. So there is good cause to think that the leader is failing. Major resistance. Traders, don't forget, it's not listed on here, but the 200 ball moving average comes in right there as well. So you have the 200 ball moving average on this chart somewhere up here near the highs. You have a head and shoulders with a head test taking place right now and major resistance with indicators beginning to roll over. Will it go down tomorrow? Well, I don't know. How could I possibly? This is not a crystal ball, but it's as close to a crystal ball as I've ever come across in my 28 years in this industry. This tells me that we will likely go down tomorrow. Let's look at a few more charts. Okay, traders, sticking with this theme, you are now looking at the Dow Jones Industrial Average, the big, broad industrial average. Basically, it tells you the health of most of the major companies in this country. What you're looking at here is shoulder, head, shoulder, a head and shoulders undoubtedly, with the head test area right there defined in yellow. And we're at the head test area, and we're butting right up against the 200 bar moving average. Traders, that 200 bar moving average is very closely watched by fund managers all over this planet. If you fail to get above, selling comes out of the woodwork. If you do get above and settle for a couple of days, then the buying comes out of the woodwork. At this point, we failed last time we got up here. We failed here, we failed here, we failed here, and yesterday is day 4 that we are failing at that 200 bar moving average. More evidence that the likely move will be the downside when the market finally leaves this do or die area. Let's look at another chart. Okay, traders, we can leave the United States and look at European markets and find the same picture. This is the German DAX December daily bar chart. Shoulder, head, shoulder, head and shoulders, head test. Right now, right here, here's where we are as of Wednesday's settlement. Traders, look back here. Shoulder, head, shoulder. What's this? A head test. What happened? Got right to the head test area and broke. Ba-boom. Here we are again. Shoulder, head, shoulder. What's happening? We are right at the head test area. Poorly drawn line, but we are right at the head test area. What should happen? Failure, breakdown, like you've seen here, like you will see almost any time you get one of these head and shoulders to build multiple times in a rounding top fashion. So there it is. The DAX does not look healthy because of the head and shoulders and the head test. Traders, of course, there is the chance that we get above this head test and we actually pass the test and end up settling up here. And then if you get another day settlement up here, then you can start to look bullish and very bullish. But that's not where we are. We are at the head test area, and we are starting to have trouble up there. So let's trade what we see for now and not what we hope for. Let's look at another chart, traders. All right, traders, this is the one that we've been waiting for. This is the Emini S&P daily bar chart. This is December. What do we have happening? Traders, shoulder, head test area, running into that right now. 200 bar moving average right there, right in our way. And of course, if you go connect that major trend line, you will find that it is running right into the area that we are at right now, right here. Lots of reason to think that before you run out and buy the S&P, you either sidestep it and wait, or you sell into this mess and see if you get what you would normally get after a Head and Shoulders head test. Traders, do your own charts, do your own homework, look for your Head and Shoulders, look for that head test. This was very repetitive. This should be easy for you to spot on your own. I hope you are using these techniques to benefit your trading style. So, traders, you've seen those charts. You see what's going on there. The Head and Shoulders test is real. It is something that happens. And more often than not, markets fail at that Head and Shoulders area. So, are we in a do or die area? What do you guys think after seeing those charts?
Absolutely.
Absolutely. What do you think?
Yes.
Yes, he says yes. I think we are. We'll see what happens. Traders, no joke, we have to clear out of this area. There is no way we're going higher unless we can really blast through this area and settle for a few days. But with that 200 bar moving average looming above us, the Head and Shoulders head test, then the major Head and Shoulders that I showed you when I did the chart segment for our comment writer for the day. Traders, what else can I say? A professional trader has no choice but to go with what he sees there, and you got to sell into this unless somehow, the markets settle above this do or die area. Look, I am, for the benefit of the markets, I am always there hoping for our 401ks and hoping that market will explode. But I can only trade what I see and convey to you what I find on the charts. I cannot trade what I hope for or what you hope for. So we trade what we see, and we hope it wins. That's about the only hoping you should ever do. All right, traders, I'm going to get out of here. It is Thursday night for Friday. Make sure that you put your stops in, because a stop is your best friend, and never, ever trade without stops. The worst horror stories I've ever witnessed in this industry were guys who put on positions and didn't place their stops. Next thing you know, they're on a stretcher getting carried out. You know what I'm talking about, especially you ex-floor guys. Make sure you put your stops in. Traders, give me a call time during night, 702-629-4755. And I noticed that droves of you are showing up in my chat room lately. Thank you so much for showing up. Traders who may not know, if you come on down to www.livewithoscar.com, you can create a free membership and jump right into our trading chat rooms, where you will find me and many other traders there throughout the day and night, getting through these rough and tumble markets. Lots to teach you, lots for you to learn. Come on down to those chat rooms. I'll be there for you. All right, traders, I'm getting out of here. Make sure you keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.